Hello everyone, today is September 2nd and this is Wyckoff Market Discussion, session number 33 of year 2020, episode 210. In the upcoming events, we've talked about this and I just conducted Monday and Tuesday classes. Those are Wyckoff Trading Course, Part 1 and Part 2. If you would like to see what it is all about, if you are new to Wyckoff Analytics, then you could check out those sessions on YouTube, our YouTube channel, which is called Wyckoff Trading Method, and you could definitely shoot us an email, ask any questions about this signing up for those classes, and please do consider signing up. TSASF is a local Bay Area technical analysis organization. Will be conducting its annual conference, which this year is going to be online. It's called Old School is a New School. It's gonna be held on September 12th, and it's free to the TSASF members. So go to their website and check out this offering. And as usual, Stock Charts TV, airing power charting episodes with Bruce every Friday at 3 p.m. Eastern. So don't miss that. You can catch that also on their YouTube channel and on ours. And today's session is a complimentary session. We do this once a quarter or about. And usually when we do, we have a promotion for those of you who are guests to this session. This promotion will expire next Wednesday, and it's at $79 per month for weekly sessions of the WMD. Bruce, hi, how you doing? Are you ready for today's session?
I've never been so ready.
Okay, yes.
Well, I'm so looking forward to this.
Yeah, well, we've been preparing for the whole day, so hopefully you guys will like it. With that, let's just jump right into. Okay, so I did mention other classes that we've had on Monday, Tuesday, so check those out. Our flagship class, Wyckoff Trading Course, Part 1 is all about analysis, so check it out on our YouTube channel. Part 2, execution, check it out on the Wyckoff Trading Method YouTube channel. Today's session, weekly Wyckoff Market Discussion, is an application, so we talk about the markets. This is the wrong date, by the way. And then also check out our on-demand offerings on our website, wyckoffanalytics.com. All right, let's talk about the markets. Let's just dive right into it. So here is the screenshot that we usually show our students. And these are, most interesting instruments that we follow from session to session. On the top, you could see S&P, NASDAQ, Russell, the Dow. All of those are E-mini futures. And as you could see, every of those indices, every index is actually in the uptrend. And if we will be talking about different time frames, long-term secular time frame, uptrend, intermediate time frame, uptrend, and short-term uptrends as well, with acceleration to the upside, with an exception of the Russell, which actually is trying to get out of this short-term trading range as well. And I've put here some trend lines. So Bruce, if there would be some kind of desire to look at those a little bit closer, we could definitely do so. We still have some room to hit that extreme overbought condition and to overthrow, and we'll talk about this on the P&F counts, where we are with those. Look at NASDAQ. We still have some room here as well. Definitely a lot of room for Russell. And the Dow just became alive lately, and still we have some room to the overbought condition. So that's kind of like my first view of this. Bruce, any quick thoughts just on the indices themselves? Is there anything that catches your eye?
Well, the trend channel is all important. What really catches my eye is if you look, say, at the S&P 500, top left, there's a throw over of the channel. That occurred in early June. So there was an acceleration up into the top of the channel, classic Wyckoff event. which is a throw over and an overbought condition. And at that time, we had said that it was going to be create a range bound condition for the time being. And then, as a result of that, the S&P, the NASDAQ 100, the Dow went into a reaccumulation structure. And so, and notice the return back down to the bottom of the channel. Now, the only point I want to make at this moment is that that overbought condition and throw over occurred into the end of the second quarter. So it was a rush by institutions to jump into the market in a bigger way, to build positions in stocks they wanted to show on their portfolios. So they accelerated purchases to make sure they got those in before the second quarter ended. I believe that we have something akin to that happening now, and that we have had, after that reaccumulation structure starting in July, that we went back into another trending situation after the completion of a reaccumulation, and that we're now accelerating up into another overbought condition into the end of the third quarter. So here we are in September, and the market's accelerating. So that's the main point I would make right now.
Also, this leg right here kind of reminds us of what's going on here as well. It's this acceleration that we're talking about. And some students were asking me somewhere here around this area, and look how the mean of this uptrend channel is just perfectly catching a lot of this stopping action, which is so nice. So it is a valid channel here. So the question around this spot was, well, first of all, are we going to accelerate more? If we're in the climactic run, yes, we might have acceleration. We might have kind of like a slight acceleration like we had here. But the key is just, the touch of that resistance line, and hopefully just an overthrow condition that would show us like we are actually overbought. The second question was, well, how would we know that we're experiencing something like this and that we are done? Well, we need to experience some kind of change of behavior. So whenever even from here or, at the higher price, we need to have some kind of bar that would reverse the previous bars to the upside. And with that, supply signature should increase. And then we should have more price structural damage to the downside. That would constitute that change of behavior, and that would suggest that we are changing the environment from the uptrending environment to the non-trading environment. And by the way, this is a very natural spot, and we've talked about this in previous weeks. Above the all-time high, previous all-time high, to commit to the upside, go into the overbought condition and then have the reaction into the support area. In this case, I'm looking at about 3,400, and that makes a perfect sense just to hit that support on the uptrend channel and also to hit that support of the all-time high, previous all-time high. And then from here, just start consolidating. When you think about this type of structure, think about this move as a sign of strength relative to the all-time high. All right, Bruce, let's come back to our slide. Actually, let's look at some of the trend lines here. This was very interesting. I was kind of playing around with this. So NASDAQ is actually well contained within this up channel, and now it's way above it. So what's the next line? Well, you kind of want to have that larger channel and just to see where the overbought condition will be achieved, and where probably there was a target of 13,200. So somewhere here in the overthrow, we're getting right into this target, 13,200. So it would be very interesting if the NASDAQ would do exactly that, go into that overbought condition and then move down. So we'll have to see. Okay, Bruce, let's come back to our slides. Really quickly, maybe some thoughts on some other instruments here, Bruce. Um, Metals, so gold had the same type of overthrow, overbought condition, and we were talking about this in the last couple of sessions. We are in the trading range, and so is silver. Any thoughts on these two instruments, Bruce?
Well, we have been of the mind that, especially after that climactic march into an overbought condition, which occurred in early August, that there would be a range bound structure, which you can see that with a climax and an automatic reaction. And so classic structural characteristics of the beginning of a trading range. And so here we can see that that in fact is happening with gold. And if anything, I think that gold is continuing to show that there is supply present, lower highs, and support is so far holding. This looks like it could even be a pivot of some kind of a hinge type structure. And I think it's a little too early to tell whether or not this is going to resolve itself into another leg up. But notice so far that there's a lot of volume, and we would like to see volume as you conclude a reaccumulation dry up. And if it's distributional, you're going to see the volume generally tend to remain high, and the volatility also to remain high. So the volatility seems to be getting squeezed out of gold so far, but not a lot of, but a high degree of volume here. And so we're just continue to be very sort of cautious with gold, with the primary trend clearly being up. Now, in the case of silver, you can see that silver's got a pretty well-defined series of higher lows, and the volume is drying up as it's pausing and attempting to come back down again. So that, I think, is very constructive for silver, and I can't imagine that at this point silver and gold are going to go in opposite directions whenever this is concluding. So I think the bias here is to think of higher prices. It's just a question of how long a reaccumulation can take place.
Very interesting trend lines, Bruce, here also. Again, was just playing around with those for the session. And we kind of see how from a lower part of the up channel, we are accelerating up, and now we are residing in the upper part. And I wonder if there is a possibility of the continuation. Gold is probably showing more of the trading range here, and silver might actually follow. I wouldn't be surprised if we would just retest this medium line right here, somewhere around 23. But if there's going to be some kind of strength in the metals, and specifically in gold and silver, would be expecting that, because silver is a little bit stronger here, and as Bruce has said, volume signature is diminishing, so supply selling is diminishing. Silver might be leading again, and we'll try to retest, this high at around 27, 28. So it just depends. And then the trend channels for gold, Bruce, please check out this work right here. Seems like, COVID reaction, a deeply oversold condition, but still within the time frame, within the framework of a much larger uptrend, and then a very clearly defined overthrow, overbought condition right here. So we might spend some time around this area. All right.
Sure. And the only thing I would like to add here, just because it's so classically Wyckoffian on gold, if we could just pull up that chart again, make it full screen, is that you can see, like looking back at the March, April, May period in 2019, and then you can see in the November period, September to November, and also in March to May, you can see that there is a real resistance to correcting, going down. Really bullish behavior in prices here with gold, and this is really, and it pulls back, gently to the bottom of its channel, and then turns around and resumes its uptrend. So I guess it's even possible that gold may have to either spend time going sideways or correcting back to the lower levels of the channel before it can get going. And we know that markets are more than willing to take their sweet time, but look at how beautiful and bullish the action is in gold in this uptrend. So very constructive, and the dollar continues to be weak.
Mm-hmm. So kind of like this type of situation where we are in the overbought condition here, and then what Bruce is saying is that we might take some time. We might be in some kind of trading range, especially after such overbought condition. All right. Well, let's jump really quickly to Bitcoin. So here is the whole structure right here. We are clearly in the uptrend. We're testing again, this medium line is extremely important, has been touched many times. And Bruce, I would say that structurally, this structure right here, this apex formation, kind of reminds me a little bit on a smaller scale of what is going on right now. So what's your view here?
Well, looking back to into the 2019 period, you can see all that volatility as it became climactically overbought, tested the overbought condition, and then had a distributional structure thereafter. And you can see any attempt to rally, it just becomes more and more muted, which was, at least in a swing trading sense, a short-term negative. Well, now you get over to the right side of the chart and you can see that the opposite's occurring. So this really looks like a big, beautiful accumulation in Bitcoin here. And again, the same comment for Bitcoin off the climactic lows, which is look at the attempts to correct in the uptrend. They're very shallow and dull and all the way up. And this so far appears to be that there may be more time that needs to be spent in this range bound condition that we're in now. But I think it's acting very constructive and is trying to push up through previous overhead resistance. And so far, it doesn't show a real interest in turning back down. So it seems to be attempting to absorb supply.
Absolutely. All right. Well, we'll be on the lookout how the Bitcoin is going to behave. And then, well, really quickly, let's look at oil. I don't want to open, the full chart just because of that big spike to the downside. So this is the latest structure that we see in crude. And we've discussed this. This is the upsloping wedge. And usually one of the things that are going to be extremely important how the price leaves this type of formation is that there's going to be some kind of acceleration, whether to the upside or to the downside. This pattern actually could be both bullish and bearish. And we are seeing attempt to break to the downside. Supply has increased today. We're still not out of the woods, from the bullish uptrend. So we'll have to see what kind of confirmation we're going to see here with this breakdown. Previously, we had a very quick move up when that happened. So we see some tails. Today, we didn't see the tails, so it shows a little bit of weakness. Bruce, what about oil?
The only thing I can think to add here is that we looked last week at a intraday point figure chart that we had done back a few months ago, and oil at that time was around $33, and we had two counts that went up to 42 to 44 and then up to around 55. So we seem to be consolidating at that lower objective, and I believe that the higher objective is still very has real potential here when oil's done correcting, which I think it's in the middle of doing now.
All right, sounds great. Let's go to the next slide. We do have a lot of slides today. We want to go into the details of our market analysis, so let's just go through those slides. Bruce, this is the put-call ratio that you has been showing us for quite some time. So where are we in terms of the sentiment?
I'm only laughing because when Roman says that, it's really a way to prod me to go faster because I can get carried away. So we look at this chart a lot, and it's just the put call ratio, and it is back in January, February. It got to a really low historic level, meaning lots of call buying, which means there was bullish speculation, which is typically interpreted as bearish for the market. And of course, we had in February the beginning of the break, the COVID break in the market. And you can see what happened thereafter with, and so the red line is just the raw day-to-day data, put call ratio. The green line is a 10-day moving average. I prefer the 10-day moving average. Now, here's the thing about a sentiment indicator like this is it's environmental. It's not a perfect timing tool. It just tells you the nature of the environment. And there's another attribute to this I've mentioned this in the past, so it's a little repetitive, and that is that it tells us that, especially with the green line here at a new low, is that says that there's a tremendous amount of speculation in options, in call buying, which means that options are very, very expensive. I know that many of you trade options and you're probably going, absolutely, they're way too expensive right now. And that is a sign of intense speculation. So we can't really say here that there's some kind of a pinpoint timing attribute to this. It's just that there's a lot of speculation. It's bullish speculation. It's causing option prices, especially calls, to be very expensive. And it's at some point, this is going to create the condition for some kind of a correction in prices. Exactly when that happens is difficult to know from this data, but maybe we can establish that through other types of tape reading skills or techniques. Ramon?
Yeah, I think the biggest question for me here is what would be the signal here? And I think, it's so important to keep in mind what Bruce said. It's an environmental tool, right? So we're seeing this condition, overbought condition in the market. We are in the overbought condition in the market currently. And we're
And
still
that
seeing,
in that December to February period was a historically high volumes. That was a real intense speculative period. And as you can see here, it's even more extreme now.
well, let me kind of work through some of the things here. I put this same indicator here on stock charts, and I'm thinking, Bruce, about the structure since 2018, right? So we had that big change of character, and in 2017 we had such a great climactic run, then went up, the low, another high, another low, and now we are at another high. So I'm curious here, and here, how we would see that signal. So it's really kind of hard to really pinpoint the actual top. So the conditions where we're saying that the market is overheated are going to be more visible like this. And I think, Bruce, if we would just like see some kind of breaks, like
Mm-hmm.
in
Mm-hmm.
2018, then in 2019, those overbought conditions, and then the break that comes later on. So currently, we are definitely in the overbought condition. So where is this break? Once it's going to break, that's probably will act as a confirmation on this tool that that overbought condition is resolving into some kind of more meaningful reaction. What are your thoughts on this?
I think that makes perfect sense. The other thing on the 10-day, because we know it takes 10 days of data to start to turn that average up or down, is the 10-day starting to turn up would be, and in the case of February, you could see it came from a higher low and turned up. And the other thing is that this indicator is much more acute at the lows because of the extreme bearish sentiment uh, uh, condition where the fear becomes tremendously acute. And so you have this acute condition of fear where, you know, right at the near the lows, and it actually came prior to the lows. And then once the lows were in, the ratio is actually starting to turn. So, but the 10-day, I would say the 10-day's got to be turning direction and going the other way as at least as a basic condition. And I love your idea, Ramon, about having some kind of a trend line there and looking for on the 1-day basis for the trend line to get broken.
All right, great. Well,
Yeah,
we
that's
have
really good thinking.
some other indicators here. This is, you know, one of our favorite indicators on sentiment, fear, and greed from CNN, I believe, right, Bruce?
Yeah, for some reason, CNN just keeps track of this fear and greed indicator, and you can actually go in and do a search on CNN fear and greed, and you'll get a link to it. And we've seen the number reach, well, you can see it right there in the bottom chart. We actually were showing these numbers back at the beginning of 2020. You can see that it was nearly 100%. And so extreme, what they would call extreme greed, and the reversal off of that, which was the COVID decline, to where it went in very short order to near zero. And we were actually showing that here at the time, that, you know, when you get to those extreme numbers, something really important is going to happen that's going to change that. Now, what I think is interesting about this, and we put this together for you all, you can see that we took the history and we lined it up to the, in this case, we just used the Dow Industrials, but you can see whether you line it up to this or the S&P or the NASDAQ 100, you can see the extremes. Well, notice that you get close to that 80% level and you get often an important extreme that may not be anything more than a trading extreme. In the case of the Dow back in January of 2018, which Ramon just referenced, that was a pretty intense buying climax, and the automatic reaction was 2 short, intense declining weeks. Then on that secondary test, that decline that came where you can see the fear and greed got up close to 80, but not quite, that decline was very intense and was a decline to a low below the early 2018 lows. And you can see how extreme the sentiment index got at that low. It got almost down to zero, extreme fear. And so you can see here that there's elements at work. Well, now we're right back up to where we're pushing up against that 80 level, and that could very well create the condition for some kind of a pause or correction from here for some period of time.
Or potentially, and I'm just looking at this, and it makes perfect sense because we're in the non-trending environment, we're in the trading range, so we're going to oscillate around extremes. I think Bruce's point here is so great that, you know, when we don't have an extreme speculation, yes, we will have some kind of reaction, but it still will be more bullish within the context of the price structure. But whenever we actually go to extremes, that's when a more meaningful change of behavior will happen, or a more meaningful correction will happen. So it will be very interesting to see where we're going to stop. We're going to, you know, kind of correct that structure.
Well, let me make this point too, Ramon, and maybe ask it as a question. You may have a thought about it, because, and we're going to look at some NASDAQ 100 charts here in a minute. But we can see the Dow is one of the laggards, because the S&P has actually gone to a new high here. And so the Dow is at and this is through the first, that the Dow is just up against that broadening formation trend line. Well, and the fear and greed index is below 80 slightly. So what I find interesting is that you have the S&P and the NASDAQ in a really strong upward trend, but you don't have the kinds of extremes of sentiment that you had back at the beginning of 2020. And so is there a reason why the investing trading community is not more bullish at this moment? But even though you are at a pretty high level, why is it not up around that 95 to 100 level that it reached back at the beginning of 2020?
Bruce, the only answer that is in my mind right now as you're asking this question is just the extent of the COVID reaction and the deterioration of the sentiment that it produced among money managers. So, when I talk to money managers, a lot of them started investing exactly where you've identified, this point where we had the reaction. It was more meaningful than any other reactions. They had to be in the market because they would be losing the relative performance. So they're starting to invest at this spot, and they're just continuing investing on the way up. So therefore, their sentiment was not, necessarily as bullish as it was, let's say, in this spot right here, or even off this December 24th, 2018 low when we had, liquidity problems and the tariff war. And they just were much more speculative right here, which kind of ironic because, the way how the market moves, it moves much faster to the upside than in 2019. So I think it's just a matter of how COVID reaction deteriorated the bullishness among money managers.
I think I'm sort of riffing here, but I think there's a dichotomy where we just looked at the put call, and that's actually a measure of what people are doing and the extent or the intensity of their put and call buying activity. So that really does show an extreme that is quite high, where when you look at the index of these, which is a combination of a number of sentiment indicators that are in this index, and you can see that there's a little bit more apprehension, we might say, in this index over, say, what's going on with the put calls. So the activity is much more intense in the put calls. I'm wondering if this isn't a combination of what you said, Ramon, about the recent memory of the COVID decline, but also a little bit of anxiety about the upcoming presidential election in November, and that might be just weighing on people because it's a pretty intense period where there's a lot of headline, top line news going on and lots of things happening, and people are concerned about how that might turn out one way or the other. That's not a political statement, it's just the fact that we're going to look at a chart here in a minute on that. Anyway, but so just everybody go look at that CNN Fear and Greed Index, and in there they actually have the individual components listed and where they are. And it'll be great to see some of the different ways they capture the sentiment conditions through this combination of indicators.
All right, sounds good. Let's move forward. Okay, let's look at the S&P. This is the vertical charts, E-mini futures daily, and also the 1 hour PNF, traditional way of putting it together, 30 points per box, one box reversal. What is important here? Well, obviously on the vertical chart, what's important, and we've discussed this, we are in the uptrend. We are actually somewhere here already, so this is from a day or two ago. But on the PNF, look how nicely all of those smaller reaccumulation areas are pointing to the actual high from which we're going to have some kind of change of behavior reaction. And that would suggest that we're going into a trading range, which is reaccumulation trading ranges. That would create a short-term causality for the next swing up into the next overbought condition. from which we're still going to have the same change of behavior condition that would suggest the trading range or consolidation. Again, this is where shares will be picked up by institutional money, and that would absorb the supply and push the price higher. And we are here. We are right at the overbought condition right here. So we actually went above 34.60, 34.50 as targets. And that overbought condition, what does it tell us? Well, it tells us to wait and watch for the reversal. And if it happens, then we probably will start that, change of behavior type of action. Plus, I want to mention one more thing. This counts right here, 34.60, 34.50. Obviously, we're above that. So what do we do next? We extend the count. So there is a larger count here. And then also on the backing up line, if we would take this whole count, we definitely will have higher objectives, and Bruce will show us on his PNF charts, what kind of higher objectives we might potentially have. Bruce, any quick thoughts?
I love this chart a lot, and the thing I see that really stands out here recently is the volume. And Roman has actually given me the reason through his work to really appreciate volume on point and figure, which I never really looked at before, and he kind of really brought me along to the value in that. And I thank you, Roman. But I was going to ask you, I see a lot of volume, sort of an intensity of volume coming in as it's going up into this overbought throwover condition. How would you interpret that?
Yeah, so speculation attracts more market participants, and we're expecting that the volume signature is increasing as well. I always think, and together with Bruce, we always think about institutions, right? Because the whole methodology, Wyckoff methodology, is based on the idea that the trends and the price action is based on the buying and selling by institutions. They have the size, they have the knowledge, they have the execution skills. So if they start to participate more actively, we are a little bit overheating. And I think this is just a reflection of that speculative run, Bruce.
I like it. And what I would be looking at or be concerned for, and we may not see this anytime soon, would be to see a lot of volume come in without the resulting effect in prices moving up easily. And you can really see that in volume on the point and figure. I think that's one of the really great attributes about point and figure.
Yeah,
volume.
and it makes it a little bit easier for tape readers to, go through the chart. Actually, I would, suggest for those of you who are studying tape reading or using tape reading, definitely look into the PNF. And Bruce, what a great, you always point our attention to, how PNF has more volatility, and we could see a lot of swings up and down in the formation, whereas on the vertical, this is very hard to see. This is the same trading range that we're looking at on both of the charts, and they look different. So absolutely, we need to look at the PNF and how the swings are unfolding. All right, let's go to the next slide. This is a very quick study. I put it together. I was talking to Bruce, and we were thinking about the climactic run, and it seems to me that 2017, and this is into the end of 2017 into the climax in 2018. How do we study this behavior? Well, there are different phases, and for those of you who are in the practicum class, we're going to go through this material. This is for more advanced students. But the first leg up, usually off the significant low, will have some kind of momentum behind this. This is where institutions are extremely aggressive in their purchases. They want to buy the long-term value. At that point, everything is so depressed. The prices are so depressed. They could get almost anything, and liquidity is available because people are, weekends specifically, are still fearful, and they are selling their shares in bulk and at wholesale prices. So we see this, and I'm using here S&P 500 2-hour chart. So you kind of have to wrap your mind around this, because this is kind of like that analog that we're using, structural analog. We're not referring to the time frame, we're referring to the actual structure. So we could see how the momentum increases here as well. And then we go into the period of vertical absorption. This is where there is some profit taking that takes place. And as they sell some of their shares in anticipation that, there might be either a trading range or a repeat decline or retest of the low. These are usually the reasons, protecting also their institutional portfolio. They could do that as well. We usually have a bumpy ride in this area, but once that supply is being picked up, there is really not a lot supply left. And therefore, the next movement is going to have that speculative nature. And we call this in WTC courses texture. There is a specific texture. We could see how the price goes up. There are very small reactions in 2017 that we have had. And then the final acceleration with the final maybe like bar where we're going to see that climactic action. And then the initial change of character before the actual drop down. So in a way, Bruce, it kind of reminds me all of these three textures, three phases of the uprise, and I would say that we are probably in that final speculative phase. We still have some room to go. We saw this on the PNF, and we'll look at this again. And this final leg looks like accelerating, but analogs are analogs. And I was talking to a technical analysis analyst who is my friend, and we were chatting about analogs and fractals, and he said one thing that just kind of stuck in my mind. Use the analogs until they work, and then when they don't work, don't use them. And it's kind of so simple, but it's stuck in my mind. So I think that we could use something like this as an analog, as how the price rises, how the price, could climax and could start reversing. Bruce, your quick thoughts.
I'm only going to add that one thing that I think we've spent a lot of time on studying, which I don't see that there's a lot of work that's been done on the evolution of a trend, how a trend trades differently as it matures. And if there's any big lesson in what you just described, the phases of an uptrend contextually change as they mature, and understanding how they mature can be incredibly valuable. I mean, look how easy it was to trade that third leg or the third phase of this uptrend, because there's just so little volatility in the rising prices. So I just think that's just brilliant.
Yeah. And for those of you who would like to study this, practicum is the class, to study the trend work. Bruce has done a lot of work on trends as well. So from time to time, Bruce brings to WMD, those type of studies. So we'll definitely in the future, we'll look into this more. All right, Bruce, we always have some kind of contributions, submissions from students and from our content contributors. Today we don't have student submissions, but one kind of stood out. It came from Ravi, and Ravi just gave us a chart of the S&P and envelopes, standard deviation envelopes. And it just was so interesting and fascinating to look at this. So we decided, to put this on. And from Bruce, we have that PNF count. And as I look, Bruce, at the touches, and to me, this works as any of the volatility bands, whether Bollinger Bands or Keltner Channel, and we kind of seeing where the tops are being made. So this is a second standard deviation, second standard deviation, second standard deviation, I want to point your attention that in the uptrend, we could actually overcome the band and travel still up for some time. So you have to be really careful to identify this overbought condition right here and not to act on this right away. But once we go to more meaningful stopping actions, we're probably going to go into the third standard deviation, and we are still not there. So there is still this room that we have for the price to go up. And Bruce, I think that whether we're looking at the trend work, whether we're looking at this work, whether we're looking at the PNF, whether we're looking at the fear and greed index, it just tells me that yes, we're in the overbought condition. Yes, we're in the climactic run, but we're not still there for the reversal. And we still have a little bit of room. Do we have any room on the PNF? And also, what is your opinion of this chart from Ravi?
Well, what really stands out about the standard deviations is as they widen, is that in an uptrend, you tend to spend a whole lot of time riding along the upper standard deviation lines in an overbought condition, which is classic uptrend. But in a bear market, you're going to spend, in a declining market, you're going to spend more time in the negative standard deviations and just be able to linger there for longer. And so that's just classic trend following characteristics, which kind of goes back to your prior discussion on your analog. And so, yeah, this is really great stuff. The one thing that really stands out to me, and we've talked about this before, is just looking at the 2018-2019 period, that you have these swings of ever increasing volatility, which is not what I would describe as characteristic of a classic reaccumulation structure or trading range. And so this is really quite remarkable to see the volatility just become ever greater through here. But turning to the point and figure chart, this is just classic one box method point and figure using daily data and then ATR scaling, which is 37.42 points per scaling change. And this is just a classic one box point and figure chart. The yellow shaded area represents the base area in 2020 off the big decline. And look at how well this has worked. The lower objective went right into the area of that overbought condition that we talked about in the S&P, where it threw over its channel and then became range bound for a period of time. Well, what does that do? That just sets up another count. And so we have the first count goes upwards, reaches up to 3667 on the S&P, and we currently are at 3580-ish, 3581. The second reaccumulation count in purple counts upwards to the 3629 area, 3630. And so they more or less confirm each other. So you have a stepping stone confirmation point and figure count, which is a classic setup condition in horizontal point and figure counting as done by the Wyckoff method. And this is just using just traditional one box reversal swing trading. And so here we are approaching this higher count objective, and you have two counts that confirm each other. Be very interesting to see what happens, because we've already established that we're going to be in a relatively overbought condition, especially if we can get up to those count levels. But the other point I would make here is that we are already in the count objectives for both the base count and the reaccumulation count. So there's nothing to say that we have to get to the top count levels. The reason that I would think that would be entirely possible and maybe probable is just because there's so much momentum right now. And so this momentum could easily carry up to those levels. And then the other part I would say is that when you create when you get up into a level, fulfill a count that you would look for a new cause, a new count to form that's either another reaccumulation for higher prices or distribution for declining prices. And as we see back here at the beginning of 2020, we can see there is a classic distributional structure there, and that was a beautiful count that went right into the range of the lows back in February, March.
Bruce,
Your
I was
thoughts?
thinking as you were talking, as traders, as investors, we always have to anticipate, and especially as speculators, we always have to anticipate what the next trading opportunity is going to be. So obviously, climactic action has opportunities on both sides, on the way up and then on the way down. So you have to prepare yourself, and you have to think about, like, if you're running a portfolio, if you have several positions, as a retail trader, when, under what conditions do I exit my trades? Is it just stop losses that going to take me out? Is it the market action that's going to take me out? And then what kind of opportunity I'm going to have next? So as a speculator, I'm always thinking, climactic action is going to resolve itself with the change of behavior, and that change of behavior could be, quite volatile event. It could happen very quickly, like in January, February of 2018. After the big climactic run, literally just in 5-7 days, we had, quite pronounced decline. So, what are your thoughts on what's the next opportunity right there for us? And also, how could we prepare for that opportunity?
Well, in the case of say it's a classic top, looking back at that beginning of 2020, you can see here a lot of volume came in on the surge into the final highs, and the volume diminished as it pushed up into the final peak. And you can see an attempt to throw over to that 3367 area, and then a sharp reversal. Well, there is your classic change of character, where all of a sudden there's a 6-box decline that took it out of this, what turned out to be an important causal structure. And so this is the kind of thing that we'd be looking for, and you can see it really handily in the point and figure work. And this is just daily point and figure. And in the case over here, you can see that in June, you had a very high volume surge into an overbought condition. And then immediately there was a 6-box reversal that, I mean, think of this, 37.4 points, 6 boxes without any kind of a correction back up. And that set the outer range of this structure, which could have been reaccumulation or it could have been distribution. And so there's an opportunity there. Well, we could see the volatility coming out of the S&P as it worked its way over to the right side and finished building its count. It just kept making a series of higher lows. But what if it had been more akin to what had happened back in January, February, where the volatility started to become greater as it was breaking down out of its structure? And we actually looked at intraday point and figure back at that time, and you can really see it in the intraday. But it's definitely available to be seen even in the daily data. So there, is going to be an important opportunity. I think it's very interesting that this column of X's that we're in right now is coming with an intense amount of volume. So you can really see that there's, and it could continue to go. This is not to say this is the end of it. There could just be a continuation with additionally high volume. But it is a sign that something is starting to change. There's an intensity in this move as it's pushing up.
All right, sounds great. Thank you, Bruce. All right, so this is a seasonal pattern, and this is the U.S. presidential election years. Bruce, you walked us through this before, so it's very interesting to see this rally into August. Please talk to us about, this August rally.
Yeah, I think the early part of the year. So basically, just to kind of describe this, this is 116 years of presidential election years. And so each presidential election year, they just sum together, and a number of people have done this work. SeasonX, which does this seasonality work on a lot of different data series, does great work, and we thank them for allowing us to use this chart. There's 116 years of data, and this goes through the 2016 election. And what they do is they just sum together all of those years and then look and just publish or plot the sum. And so you can see here, the first half of the year definitely was skewed by the intense COVID decline off of the January, February high, which gave us a March low. And so you can see that there was typically in a normal presidential election year, the first half of the year is just a big trading range. Well, in fact, you had a pretty sharp decline, intense decline. But then after the conclusion of that trading range area, you have a rally phase. And so we can see here that there is a rally going on. Well, look at what happens in the month of August. August in the presidential election year is the most intense upward trending month of the year. And you can see, and of course, that's exactly what has happened in 2020. And so notice that at the conclusion of that advance, there's a climactic surge. And that climactic surge comes right into, call it the worst or the first week of September. So you have two things at work here. One is that you have a really strong upward trend in the third quarter. You have a climax into September. Oftentimes you get a peak in the month preceding the end of the quarter, and you'll get a peak in the month of the new quarter. So that'd be October, especially when you get a trend change. But in this case, we have an acceleration. Well, it's exactly what's happening right now in the S&P and in the NASDAQ 100, is that you have just a magnificent climactic surge that could go on for a period of time. There's nothing to say this peak has got to come right at the beginning of September, but it's interesting that contextually August is just a ripper on this 116 years of presidential election year, so every fourth year. And so you can see that after the fever breaks in the advancing rally phase, that there's a attempt to react and then a test, and a cause is built. So you can see that through the month of September, there's a cause built and then a more important reaction after that. But notice that the reaction is about a third to a half of the August advance. So I would describe that as being pretty normal, nothing out of the ordinary there. And so not a big deal. It probably will feel worse than it is. And then in October, there's a rally up into the election itself, and then a test of that, consolidation range bound into the end of the year, and then a push up into the end of the year. So you can see minor new highs after the peak is put in. So I just find that very interesting, and it kind of seems to be scripting out that way right now. I would never trade specifically off of this. I'm going to trade off of our Wyckoff Spidey sense and trade the tape. And so, but you can see causes being built for minor corrections, and then another rally coming in a classic and typical uptrend. So Ramon, I leave it at that.
Yeah, I like this model right now a lot because of exactly what you've described, this rally into August and into the beginning of September. So that's why we're saying that, the reversal could potentially, happen even tomorrow. We are so close to that. Or at least it feels in the overbought condition that we might be close to that. PNF, we are in those objectives, sentiment, we are in the overbought condition. So we just have to have the technical reversal itself. And then obviously, what is the opportunity here? And then a lot of you are sitting on a lot of profits, from this rally. So you have to think about, what kind of campaigns have you established? Are those long-term campaigns? And does it mean that you have to overcome this period into 2021 in order for you, to profit even more? So how would you go through this correction? And it makes a lot of sense that into the election, we have some kind of stop in action or a reaction, because we don't know what kind of outcome we're going to have from the election, at least for now. And then after the election is resolved, there is more directionality. So it all makes sense. All right.
I have some sort of opinions about what could happen, stock market versus real economy, and how the Fed interacts with that. And of course, this year's different because the Fed's dealing with an economy that effectively has been more or less shut down. It's operating at a slower pace than we're used to. There's slack in the system. So these are discussions we can have in the weeks ahead. But there could be some, basic shifts in the way that the financial markets and the real economy relate to each other as we go into 2021. But for now, I think this model's working pretty well. And then the only other thing I would say here, Ramon, is you can see in this July back to April period, there's sort of a classic accumulation type structure there in the, right there, that we just sort of looked at with the one box point figure. Something very similar to what that looks like.
All right. Well, let's move on. That was a really good discussion. Let's look at the PNF on NASDAQ. The same way we're looking at this traditional method, 100 points per box, one box reversal. Again, look at the causality. You will not see this causality on the vertical charts. You have to go to the PNF and look at all of the swings ups and down that the market has created in that formation. And this is a 1 hour chart, and pretty classic in terms of the formation itself. Spring at the end, sign of strength, and then the backing up action. And then again, looking at the potential higher targets, 13,100, 13,200. That's when we take this whole count right here. So, and PNF with this scaling worked pretty nice. Look again at all of those areas of the reaccumulation that lead to what? To a move up and then a change of behavior that suggests a trading range. Move up, overbought condition, change of behavior, trading range. Move up, overbought condition, change of behavior, trading range. So it's just been very systematically repeating itself over and over again. And that obviously in the uptrend is based on the rotation between growth and value stocks. So, whenever tech stocks are being sold, the money goes into the value stocks, and at some point, the shares are being absorbed, and that's what pushes the price up again. So again, we are in that zone, and we are close to the maximum counts, and that's probably all that I could say here, Bruce.
It's just through classic throw over overbought condition and fulfilling some short-term swing trading counts, and enough momentum here that it easily could get up to that minimum target.
Mm-hmm.
I mean, there's just a lot of momentum in this market.
Absolutely. All right. Well, as long as we're looking at NASDAQ, Bruce, you're bringing our attention to the NASDAQ 100 bullish percent. So what do we see in the bullish percent here? Are the majority of the stocks, traveling in the same direction?
Yeah, so you can, the bullish percent, I think, is a really great sort of undiscovered breadth indicator. And it just uses these definitions of point figure and charts of what constitutes a stock that's in a bullish position. So it looks at all the stocks in the NASDAQ 100, and they have this in stock charts for all the different indexes. So here, the NASDAQ 100 is so intensely bullish and so positive that the bullish percent is really interesting to watch, because look at how it's just sort of systematically been making a series of lower highs as you've had this intense accelerating condition. Now, I believe what we're seeing is that, and there's certainly, we're at like a reading of 75 right now. In a reading of 75% of stocks are in a bullish percent point and figure position. And so that's good. That's really good. There's good breadth there. The thing that we see is that there seems to be a divergent nature, and notice with the acceleration up, and we look at this every week or two, briefly anyway, you can see that the bullish percent is not pushing back up to its prior peaks. Well, I believe that's because there's intense trading in a few very important names in the S&P, in the NASDAQ 100, and we've talked about those. These are the FANG type stocks, and Tesla, and DocuSign, and so on. You know, all of those. There's a few names that are getting a lot of love, and that the other stocks are falling by the wayside a little bit and aren't getting the intense speculations going into this narrowing list of names. And so I just find that very interesting. Diverging characteristics, especially in uptrends, can go on for a period of time. I want you to notice that the low back in March in the NASDAQ 100 index, the NASDAQ 100 bullish percent was already rising and rallying. And so you can see that divergence was almost instantaneous as it turned up. But in the uptrend, you can see that the divergence has persisted ongoing. But I think this also suggests that there is a narrowing of the stocks that are being speculatively traded in the NASDAQ 100. Now, as we go over to the right, this is kind of my working chart for the NASDAQ 100 that I've been keeping up for a long, long time. And this chart is, I use the Qs, and this is the bear market top that goes back to 2000. And so you can see here that there was a beautiful, this is actually a redistribution count down to the lows, and then there's a gigantic accumulation, many year accumulation that forms in the NASDAQ 100. And this chart, there are basically three spans or segments that are being counted, and you can see, I'm just going to go to the one here that goes to 240 to 260. That one is a count that got us up to within a box of the high that was made back in 2019. And so that count did a great job of catching within one box of the lower range of that count objective. And then there's been a series of reaccumulations here, but notice the large count that goes, this is, in my opinion, the most aggressive count in this, which carries from, and unfortunately, I can't read the numbers because they're too small, but let's see if, yeah, I have it here, I think. So this count, the count line here was at like around $53. So that's the count line, $53, and the low was 20. And it counts, imagine that. This is an index of 100 stocks, counts from 53 on the count line up to 290 to 325. And so here we are, huge count, campaign count, and here we are approaching that 290. We are in the range of that 290 to 325 area, and currently I think we're showing this at just around 303 or 304 right now. And so we are in the range of that largest accumulation count. And I don't know that I've ever actually used this chart. It's just, like I said, it's just my working chart for the NASDAQ 100. Ramon, your thoughts?
Yeah, this is a very interesting PNF work. So, well, let's definitely come back to this also in our upcoming sessions as well.
Okay.
And as we're having this climactic run, let's look how it's going to finish itself in the run. I just want to make a couple of comments on the bullish percent. So, looking at how this unfolds, this just shows a trending environment. You could find on a lot of indicators the trends on the oscillating indicators are going to be shown by the lines being residing in the upper part of those indicators. So this looks to me like I'm trending, and we kind of see that as a confirmation we are in the uptrend. I'm going to make a slight prediction here because whenever I usually look at those oscillating indicators, in some cases, not in always cases, but in some cases, on the climactic run, and we are believing that we're experiencing it right now, we're going to have that last push that will take us slightly above the last, intermediate high in some kind of upthrust manner, and then it's going to collapse really fast. And it's going to have its own kind of like sign of weakness, attempt to go up, and then the failure. So I wonder if this pattern is going to materialize. So I'm just very curious to see if that's what it might happen later on.
Okay. My
Okay.
experience too, that's a really good point, Roman. My experience is that when you get these oscillating breadth type indicators that are a percentage of the total number of stocks, is when you get down around the 50 to 55% level, which would be a breakdown of the sort of the support zone at 60. That's when the index as a whole can start to get in trouble and start to go into a confirmed downtrend. And oftentimes the market can continue to either be in a trading range or even in a rising trend as long as the indicator sort of stays above that 55 to 60 area.
All right. Bruce, we're at 4:15. Just checking the time. Let's look at the Dow Jones Industrial Average, and this is a monthly chart. And I thought, yeah, why not return to this chart? So periodically we show you this. So what do we see here? And this is a long-term chart. So since 1929, this decline into the Great Depression low, and then every time we have a meaningful run that lasts for over 20 years, we are having mega structures that lasts about 12 to 16 years. And if we would look at where we are in terms of this concept, we're still in the secular uptrend of the last megastructure that ended with the low in 2009. So where are we actually in the up channel? Looking at the medium, and this is this red dotted line, we had COVID reaction going below, but then we're recovering really quick above it. So Bruce, to me, every time I see that either quick recovery above the medium line or the price just basically being above it, we have some kind of rally. And it might take, some time. We might have some kind of consolidation and so on and so forth, but usually there is some kind of continuation. So I wonder how the election is going to unfold, how we're going to go into 2021. And then if we are holding this medium line, I would be expecting that we're probably going to continue to the upside to experience the same type of run. And for those of you who are interested, this type of runs are based on the economy of the demographics. So here we have a lot of millennial economy. Millennials are going into their best years of earning income. Here we have their parents, baby boomers, doing the same thing. And here is off the low in 30s and 40s, a silent generation, the parents of the baby boomers. And that just repeats over and over and over again. Consumer drives the economy in the US and I would say around the world as well. So we really, really have to pay attention to those patterns. And quite still a lot of room, to go up. And this movement up obviously is going to be a multi-year move. It's not going to happen in a year or two. And then looking at what is left and looking at Bruce's P&F counts here, and obviously this is a little bit more short-term oriented, Bruce, but still, what do we see here for the Dow?
Well, and here, this is such a great big secular view. It's really good. And I would say that what would really be encouraging would be at these highs where we get the S&P and NASDAQ 100 up to and through their prior highs, would be to have the market become dull and quiet and build more count for more upward move, and thereby sort of canceling out the extreme volatility that we've had since the beginning of 2018. I think that'd be very constructive for the markets, would be to see the markets go from sort of like looking at 82,
Exactly,
81,
yes.
82.
Mhm.
And so it got up here, got up to the highs, found resistance, and then it started to really get dull and quiet. It broke out in 82 and backed up. And so that extreme period of volatility in the green box was completely negated because you had a new uptrend in force, and that would be just, I think that'd be fantastic. The good part here is looking at that point and figure chart is that we can see at these point and figure counts forming, as Ramon showed. You can see them intraday. You can see them in an unfolding uptrend as they stair step higher and higher. You can see them in that huge structure that we just looked at in the NASDAQ 100. They're all over the place and they just work so incredibly well. Here, all we're doing is we're looking at a swing trading count, one box reversal method. This is the base that was built after the COVID decline, and a cause was built off of that V bottom low, the yellow box, and that count takes us up to 30,000. And you can see that on that overbought condition in June, we had a range bound condition. This is all daily data, and it formed a count, and it goes exactly to the same place as the base count. And this is just looking at the unfolding uptrend, and you could have, after wherever this concludes, you could have another cause built, another stair step for ever higher prices.
I really like this analog, and we've talked about this, Bruce, before, so thank you for bringing this back to our attention. If we would be thinking that this is the analog to what we've just experienced, but only on a smaller scale, the price structure is the same. Here's your 2018 high, change of behavior, then we go into the upthrust action, then 2018 low in December, then attempt to go up, COVID reaction in 2020, and now the all-time high, and then a change of behavior that leads to that non-volatile environment. And I think this is where, a lot of the retail people and money managers as well could lose a lot of money, because a lot of people now attracted to markets because they move so quickly. And all of my non-trading friends are trading right now. And that's just like so weird. as they, contact me and like, look at this, look at that. And they have not done this in quite some time. In fact, since the 2017 climactic run. So if we go into the non-trending environment like this, it's going to take a lot of money out of those pockets. So all of those profits are going to be given away. All right. 420. Let's switch gears here. For those of you, again, who I guess you kind of see and could get a sense from our discussions with Bruce as to what we are about, how we conduct ourselves in the marketplace, how do we analyze the market. And if you would like to become a part of our community, please sign up for our free weekly newsletter. Regularly on the weekly basis, we update our analysis, our market analysis, so you will always find some piece of the market analysis in the newsletter announcement of any of the offerings, any of the classes that are coming up. Communal Wyckoff watchlist, we'll talk about this a little bit later on. This is created by students and curated by Bruce and I, and we're just so proud to have this product. It's free. This is done to facilitate your weekly selection. So, just use it. It's out there. Different vlogs, video logs that we have. Bruce is publishing on a weekly basis the power charting episodes, and Franz and I were going through the anatomy of the trade, where we're discussing any of the trades that we go through, usually, the mistakes that were made, and a bunch of blogs that we have. Very proud to have Alessio talk about Wyckoff structures in the crypto world. Absolutely fascinating Wyckoff structural scanning blogs by John. We have references to Bruce's power charting blog and anatomy of the trade from Franz. So sign up, it's free, and each week you could receive all of these free materials. Speaking of the anatomy of the trade, and Bruce, we could go really quickly here. We just wanted to highlight one of the segments that is going to be a rotating segment in the WMD classes. So for those of you who are going to sign up, you're going to see this particular trade, or rather two trades that we've picked up for this semester. DBA, this is an agricultural ETF, and natural gas. And here's our first chart. This is DBA. So we've talked a lot about agricultural instruments in the last months or so, and it's just being reflected in this ETF. Here is our Wyckoff labeling, kind of classic, slightly downsloping trading range. We had a minus sign of strength, ability of the rally to overcome previous highs and be able to stay there and not produce a meaningful reaction. And that happens on the background of the increasing demand signature. So very Wyckoffian pattern right there. And then a continuation out of that. And we're hitting our resistance at around 1480. Bruce, I believe last week you said that we might have some kind of stop in action here. And I would be thinking that either, 14.2 or maybe slightly lower, still within the context of the current upswing, as a reaction, and then consolidation and probably continuation. Looking at all of their agricultural charts, wow, they are so bullish, they're so attractive. And we have 2 points of entry, and this is what we're going to do with our students here in this class. We're following this trade. So we will be voting as to what to do with those trades. Keep them, and add some, keep them and sell some, scale out, or just close them. So I'm anxiously anticipating the class participation in these two charts. Bruce, your quick thoughts on DBA?
Just that the last anatomy of a trade we did, we focused on NVIDIA, and that was a fabulous case study to do in real time. And our community just did a wonderful job of trading that through the poll that we did week to week to week. I mean, really, really good work. And it was just a great experience, great case study, and a lot of fun to do it together.
Absolutely. Well, the second asset here that we're discussing is natural gas. And why are we discussing it? Well, because of this Wyckoff way of how we look at the trading range, an attempt to go below the support level and a sprint type of action that concludes with a quick reversal and price coming back into the middle of the trading range. Such a bullish pattern right there. And then it retests as a high-low, as a last point of support. Couple of entries on the way out here and here, and then look how stable this uptrend is. The only problem, Bruce, that I would say is that momentum actually kind of slowed down here. So I would be expecting that whatever supply comes in right now might actually take us down to about 230, 225, somewhere here, and we might have a developing backing up action. Would you agree with that?
Absolutely, and it's not unusual to have some kind of a more important reaction, consolidation after an important breakout like that. So I would almost expect it. So really good point.
Sounds great. Well, for those of you who's gonna stay with us, these are the two trades that we're gonna follow this semester. So it's gonna be very exciting, how that trade is gonna unfold. All right. Another way to acquire knowledge and skill, from our universe, from our Wyckoff universe, is the bias game. It's a very, very popular game right now. I mean, like, we're just being bombarded with all of the feedback on the bias game. I'm, discussing each bias game in the Practicum Tuesday class. So for those of you who are interested, you could join us there. And you could just play that game on our Twitter at Wyckoff Analysis, handle at Wyckoff Analysis. Play the game by printing out the chart, which is an assignment chart, and figure out what is the bias. Is it to the upside or to the downside? Second step, just vote what you think the bias is, distribution or an accumulation. And it's always fun to see this type of numbers, and just see how Wyckoff Nation is deciding what it is exactly. And then obviously at the end of the week, we are posting our solution on the bias, the Wyckoff story itself, the labeling, and some bullet points. So check it out on our Twitter and also find it on our website. We have all of the bias games on our website, so you could play them one by one. And then I did mention a communal Wyckoff watch list. So this is something also to check out. Go to our website, and you could either jump into the stock charts itself. We have the watch list there, so you could go stock by stock through that watch list, or you could visualize it in a different way. This is a relative rotation graph, so we kind of see the constitution of the portfolio, and we're seeing that some of the stocks actually were deteriorating from the leading to the weakening position. Also, you could download all of the symbols on the weekly basis and put it in the software that you use, and just go through that list in your software. And that's it for today. But Bruce, even though we are at 4:30, why don't we entertain maybe a couple of symbols from our audience and just look at some of the stocks? What do you say?
Terrific. I just want to ask you, because I think the communal Wyckoff watch list is such a great feature, and of course there's no charge for that. You don't even have to be a member of Stock Charts, do you?
I believe probably not, but I would have to double check on that.
Yeah, we have double checked that, but you can go in and look at this incredible list, which is compiled really by our community. And so there's some really great ideas, and there's a huge number of our people that have their eyeballs on these great stock ideas. So we see a lot of really good ideas because of this. It's really fun.
Absolutely. All right.
Well, and then what would be the way, Ramon, what would be the easiest way for somebody to get into that area of stock charts and find that list?
I think it's easier to go through our website. So here is wyckoffanalytics.com.
Okay.
And then on the top here, we have watch list, right? So here's your bias game.
Okay.
Here are your forums and blogs and watch list. So go to this page, and from here you could go to the current stock charts list. But if you
Oh,
want
easy.
to
Great. Okay.
download that list, you could download it on the weekly basis. We publish that list, so you could put it in your software, and here we go. You could just go one by one or just do it in a different way. All right.
Terrific.
Well,
Yeah.
let's go through some of the symbols. So the first symbol, Bruce, that we're being asked to discuss, and that comes from Carl, is Boeing. So what do you think of Boeing here?
Well, I like the way Boeing is acting. I like the way it lifted off the March lows and then it attempted to react, became very dull as it pulled back and had sort of a minor local spring. And then it turned around, had a really good, robust run up again, and had another minor spring where it's attempting to consolidate. The lower highs in the second consolidation, I think, might be a reason to be careful, but any kind of strength from here would tend to, I think, take out these key prior highs that are in the June to August period and would be very constructive.
Yeah, and also, guys, look at the group. There are much better stocks in this industry group, aerospace, than Boeing. So I would highly recommend that. That's actually a group on my watch list. Okay, let's look at another area, and this is also very interesting. So Carnival, and Bruce, I'm looking at airlines. I'm looking at cruise stocks, um, and I'm seeing some lift. I'm seeing that the selling has been somewhat done. We're seeing it from the volume signature that goes down, from the supply signature that is going down. I really like these rallies in this type of structures where there is some kind of sign of strength indication and some demand behind them. So institutions got in and they are not really selling it. And we see this from the texture of how the price moves to the downside. And more importantly, just recently, and we're going to hopefully just look at the airline stock here and there, slightly higher highs, higher lows on the short-term basis. So very constructive short-term action. And I think that from here, we might actually have an attempt to rally again. Bruce, what are your quick thoughts on this?
Yeah, well, it's really I love the way it's acting off the beginning of August lows. So rally, really quiet reaction, and then really not even the ability to react after that. The one thing that would get me more excited about this stock would be
Relative
if we could
strength?
get the relative strength
Yes.
into an uptrend. I'm a freak about relative strength, as you all know.
Mhm. All
And I think that once you get the relative strength turned up, you, this stock is going to do what you're suggesting, Roman.
right, a couple
Depending
more.
on the strength, yeah.
Okay, so this is a healthcare. Okay, well, I probably would have to study this a little bit more just because I could see that the liquidity here in the stock is not that great, so usually would not be my candidate. But as Bruce has just mentioned, the relative strength slightly improving, higher lows, some kind of, formation off the low. So I would probably seek more confirmation in the stock. Bruce, let's just jump into another one. And
Mm-hmm.
this one is for you. Okay, automobiles. Okay, well, this is a very interesting, even though it's a small cap, but still, what do you make of this?
Well, it's so 2 billion market cap, beautiful reaccumulation type structure after that April, May jump in 2019. No capacity really to come back. It just spends a lot of time just building a new cause. And now it's had a really dramatic jump out of that level, which confirms that that was reaccumulation. And the action here where it becomes very dull and quiet after a really good jump really does argue for this stock being closely held. And So if it can continue to be very tight in this area, could be there for, you know, who knows how long. But and then any kind of a jump out of here really does show that absorption is complete.
All right, great. Thank you, Bruce. Okay, let's go to the next one. So plug power, obviously in the group, this is a renewable energy that is really, really hot. So you have to go there and to figure out, you know, where exactly you would position your money right now. Because if you're holding the position, you're just holding the position. But if you're not in that group, then you have to find, you know, candidates that are going to be interesting. And what is interesting to us? Something like this, something where we have some kind of consolidation and then the price starts to move. So at this point, I would be thinking more of a swing trade, short-term swing trade as a continuation. Still, the pattern looks, you know, favorable on the volume and price action. Maybe there is a little bit of the deterioration of the momentum that we could see here. So continuation might not be, you know, as big, or it's just going to stay here in some kind of trading range. So again, I think selectivity here for this particular group is going to be very important. All right,
Let me
Bruce.
ask you just a quick question here, and that is that love the profile of the relative strength. It's in an uptrend. It's confirming the uptrend. You can see the stair steps. We were talking about how trends change over time. There's going to come a point in this stock and maybe in the whole theme, the whole group, where this just starts to go into a steady uptrend. It goes from being a stair stepper into just trending. And I'm just wondering what you think about that.
Yeah, sure. It just again, and I've been a little bit slacking off with this particular group. I mean, I love it. I've traded it so much in 2019, and now I feel like Bruce, you know, I'm a little bit off. I'm paying less attention to this, but wow, what great moves that group has. And obviously, with this type of the momentum, those stepping stone ranges, they're going to materialize in a much more sustainable trend. And that's what Bruce is talking about. Okay, one more, and then we'll finish our class. Again, something over small cap nature here, Candy Technologies. Bruce, how would you approach this type of liquidity in the stock, and how would you actually trade this?
Yeah, so it's a under $1 billion market cap, and so you can see that there's a change of character in the way it's traded starting in March. So it has been resistant to reacting, and now you've had a really nice jump up and out of the prior resistance area in early 2019. And so it wouldn't surprise me that because of the volatility here, that it may spend quite a bit more time going sideways before it's ready to start to go up again. That'll just discourage traders. And that'd be the way I'd focus on this, because it is thin and non-liquid.
Right. Okay. All right. Well, we are at 4:40, so this is where we're gonna stop. Again, guys, for those of you who are joining us for the first time, today and throughout this week, we're going to have the promotion, WMD promotion, that's going to expire next Wednesday before the class starts. And you can sign up for our sessions at $79 per month. Also, do consider signing up for the Wyckoff Trading course, Part 1 and Part 2. Check out all of our free offerings. I just got a note from Sharon, our student and contributor, who mentioned to me, and she's responsible for putting, you know, the whole communal Wyckoff watchlist together. So you actually don't have to be a member of Stock Charts to get that list. So just go, and find it on Stock Charts, and we could, you know, if you're having trouble doing this, just do it from our website. That's probably the easiest way. And we're looking forward to seeing you in WMD classes and in other classes. We are a very dynamic, interactive, and very welcoming community with a lot of knowledge, a lot of skills. So hopefully you guys are going to join us. Bruce, last words for today?
Just thank you so much for coming and spending your time with us today. We love doing this, and we're grateful that you were here.
Sounds great. Well, thank you guys so much, and we'll see you next week. Bye-bye.
Thank you.